Hey guys, welcome back to the channel. In this video, I'll be going over lots of market news and some buys I made that I haven't announced on the channel yet. As always, don't forget to smash that like button if you like this type of content so the algorithm guys know that I'm here. Hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. But before I get started, I have to hit you with a quick disclaimer to appease those YouTube gods. This video is for entertainment purposes only, not financial advice. You should always consult a professional. With that out of the way, guys, let's get into the video. All right, so we're going to hop over to the portfolio. As you guys can see, doing all right, not too bad here, but this isn't the story. This is not a portfolio update. We did have the Federal Reserve finally cut interest rates, which was a huge deal for a lot of people. But it seems like the market didn't actually react like some were thinking, where we would potentially rip to new highs. As a matter of fact, for the day, we saw a lot of volatility. It was up and down and a lot of whipsawing action, and we finally just kind of ended neutral almost. All right. But we're going to get into all of that. All right. We're going to cover a little bit about Nvidia. We're going to cover some news about the Fed, and we're going to get into the buys. All right. And a little bit of Robinhood. Let's get into it, guys. All right. So first article up. The Fed approves a quarter-point interest rate cut and sees 2 more coming this year. This was the biggest news of the day. All right, the Federal Reserve on Wednesday approved a widely anticipated rate cut and signaled that 2 more are on the way before the end of the year as concerns intensified over the U.S. labor market, even as inflation is still in the air. All right, so this has been the big problem that Jerome Powell has been talking about. The Fed is basically paralyzed. They're stuck in a rock and a hard place because they have to worry about not only inflation, but they also have to, fight or think about a labor market, think about a weakening labor market. And Jerome Powell already said that they're going to place more emphasis on the labor market than they are on inflation. All right, so the newly installed governor, Stephen Mirren, who has a little bit of controversy behind him because he is, he is a Trump appointee. He also has, or still has, ties to the executive branch, right? Still works in the Trump administration. Typically when, people leave to take on a job, they leave their other job, but not this guy. Instead, he's on a leave of absence, and this created a little bit of controversy on a political scale. But anyways, newly installed Governor Stephen Mirren was the only policymaker voting against the quarter-point move, instead advocating for a half-point cut. So instead of the 25 bips, he was looking for 50 bips. But, according to the dot plot for all of the FOMC, all 19 members, he was the only one that wanted more. So again, there's still this talk of a shadow Fed, or Fed independence coming into question. There are a couple of Trump appointees in the Fed, but Stephen Mirren was the only one that advocated for a bigger point, or for a half-point cut. All right, so more in this article. In the post-meeting statement, the committee again characterized economic activity as having moderated, but added language saying that the job gains have slowed and noted that inflation has moved up and remains somewhat elevated. Lower job growth and higher inflation are in conflict with the Fed's twin goals of stable prices, full employment. Uncertainty about the economic outlook remains elevated. The Fed statement said the committee is attentive to the risks to both sides of its dual mandate and judges that downside risks to employment have risen. So again, right there in his speech, Jerome Powell was saying that they're going to be focusing more on the labor market. That is where a big amount of the pressure is coming from. All right. Stocks were volatile after the decision was released, with major averages mixed after Jerome Powell characterized the cut as risk management rather than something more directed at shoring up a weak economy. So again, preparing for something. This is the whole point of this rate cut. They're potentially preparing for, what could happen in the future. There is still this forecast out there by Goldman Sachs, Bank of America, some of these other institutions and other large banks, that the United States could potentially enter a recession within the next 12 months. Okay, so that is still there. And I believe, with, this softening of the labor market, this could be just one nail in that coffin. All right, so there was a wide range of views at the FOMC meeting. All right. At the post-news meeting conference, Powell echoed concerns about the labor market, the marked slowing in both the supply of and demand for workers is unusual in this less dynamic and somewhat softer labor market. He said the downside risks to employment appear to have risen. Some of that could be attributed to artificial intelligence, to AI, to robotics. Again, it's making companies, quote unquote, more profitable with less people. So that could also play a factor in this. All right, so scrolling down a little bit more, I thought this was really interesting. A majority of the FOMC is now targeting 2 further rate cuts this year, indicating that doves on the committee are now in the driver's seat. All right, which is a good thing, said Diamond Dangor, head of fixed income macro strategies at Goldman Sachs Asset Management. We think it would take a significant upside surprise in inflation or labor market rebound to take the Fed off its current easing trajectory. The plot indicated 1 cut in 2026. Now, the plot is basically an anonymous survey by the members. They basically just say what they think, and this is what is referenced when they say the plot. All right, the plot indicated 1 cut in 2026, significantly slower than current market pricing of 3. All right, traders had fully priced in this week's moves. Officials also indicated another reduction in 2027 as the Fed approaches a long-run neutral rate of 3%. So again, the market had already priced in these cuts, and that's why we didn't see this massive run-up. But it's also, there is still some worry in the air with the softening labor market. So we'll see how these next couple of months play out, because the readings that are going to be coming out are going to be very, very interesting, to say the least. They will give us either an idea if the Fed's going to cut, even more, whether we get additional 25 bips or basis point cuts, or maybe that, hoped for 50 basis point cut. All right. But these next readings over these next couple of months will be that sign of what we get. All right. So we can see here the S&P 500, again, over the last 5 days, up just 75 points. All right. Over this day, again, this was that whipsawing effect that you guys saw in my portfolio. Again, it kind of ended flat. Nothing really exciting here. Nothing really too sexy. All right. So that to me just meant that the market had already priced in this rate cut. But we do have some news coming from Apollo. All right. If you don't know who Apollo is, they're a global asset management company with over $830 billion in assets under management. But Apollo posted this: investors face growing risk from overexposure to AI. Okay. Apollo Global Management is warning that U.S. equity markets are leaning dangerously on a narrow set of technology giants tied to artificial intelligence, AI, raising concerns about the sustainability of the current market rally. And this is absolutely 100% of the truth. As you guys can see in my own portfolio, I am probably just in trouble myself. I have Palantir, Nvidia. All right. These are 2 massive AI plays, right? They play into the whole AI thesis. But it's hard not to want to invest in companies that are doing something with artificial intelligence, whether it's software-based or hardware-based, like Nvidia with their chips or Palantir with their software. But let's continue reading. Torsten Slok, the firm's chief economist, said investors remain heavily concentrated in the Mag 7, which have driven nearly all of the upward revisions to 2026 earnings forecasts for the S&P 500 since Liberation Day. Outside of these AI-linked leaders, earning expectations for the remaining 493 companies in the index have stayed muted, underscoring a widening gap between tech optimism and broader corporate outlook. All right, Slot cautioned that this imbalance highlights 2 critical risks. First, that the market performance is increasingly dependent on a small group of firms, which is absolutely true. A lot of, if you look at the S&P 500, a lot of the returns over the last 2 decades have come from large cap companies. All right, it hasn't come really from, the bottom 490 companies, those blue chip companies. All right, so it is kind of alarming. A lot of people are saying that we might be in this AI bubble, and it quite possibly might be. Or if you believe, Dan Ives or even Tom Lee, we could be in the very early days of this artificial intelligence revolution, right? Depending on what you believe. But the data does show that, a lot of money is pouring into these AI names. All right, so the bottom line is, once again, that there's an extreme degree of concentration in the S&P 500, and equity investors are dramatically overexposed to artificial intelligence companies. All right, the warning echoes a growing debate on Wall Street over whether enthusiasm for artificial intelligence has created structural imbalance. For now, the market resilience appears to be tied to a handful of stocks, which is absolutely true, a dynamic that could amplify volatility if the AI trade falters. All right, we're going to be covering some Nvidia news because because this is really, really important. All right. This whole idea of being in an AI bubble. Are we in an AI bubble or not? So let's continue on with this. Nvidia CEO Jensen Huang says he's disappointed after a report from China claims that or that China has banned its AI chips. Okay, Nvidia Jensen Huang commented after a Financial Times report that China has banned the use of the company's AI chips, specifically, all these new chips that Nvidia was designing specifically for China. And there's a whole bunch of back and forth. This is going to get a little political on a geopolitics stage, all right, on an international relations stage. All right, the Trump administration in August agreed to a deal under which Nvidia would receive export licenses for its H20 AI chips in exchange for 15% of its China sales. However, the Financial Times reported Wednesday that China has urged its domestic tech firms not to use Nvidia's AI chips and obviously opt for domestic AI chips, probably from Huawei or any of the other technology companies out there, the other semiconductors in China. All right, so Nvidia CEO Jensen Huang has weighed in on the U.S. tech giant's struggle in China after a report claimed the country has banned its artificial intelligence chips. All right, Huang said he was disappointed in a response to a question on the Financial Times report. Huang said Wednesday that we can only be in service of a market if the country wants us to be. Again, this is very, very political. Nvidia has been in China for decades. We probably contributed more to China's market than most countries have, and I'm disappointed with what I see, he said. But they have larger agendas to work out between China and the United States, and I'm understanding of that. So again, Jensen Huang / Nvidia is in a rock and a hard place as well, because now they have to balance, domestic policies in the United States with, China policies. And you have the U.S. government and the Chinese government basically going head to head over tariffs, right? Right now, we are still in a negotiation phase between the United States and China on tariffs. But there's also bigger things happening here, which I'll get to in just a second. We've guided, and this is Jensen Huang, we've guided all financial analysts not to include China in financial forecasts. All right, he told reporters on Wednesday. The reason for that is because that's largely going to be within the discussions of the United States government and Chinese government. All right, so the next couple of earnings reports will probably be just a little different. They'll probably not be including any China revenues from the chip sales. All right. So why is this happening? Because when this happened, when this news was announced, Nvidia's price kind of, took a little bit of a dive. As you guys can see here, it just dropped about almost 3%, right? And it stayed down for the rest of the day. Nvidia has been caught in a political quagmire. So what do I mean by that? Well, first, earlier, last month, Chinese state media said that Nvidia's H20 chips were not safe for China, saying that there was a backdoor in them, that they programmed some type of way for Nvidia to shut these chips off in the event of, something happening between the United States and China, right? Probably a military conflict of some sort. Or maybe, China invades Taiwan and then the United States wants all their chips turned off, right? Or some reason like that. But this was honestly unfounded. There was nothing in there. Jensen Huang also said on public record that none of the Nvidia chips or anything that they produce has any type of backdoor. Again, this was more politically driven, probably by the Chinese government to get a lot of their companies to stay away from Nvidia. Again, Nvidia was this bargaining chip that the United States was using, and now that the United States is kind of losing that leverage or has already lost that leverage, this just gives China a little more negotiating power on tariffs. Okay, now this was the big one, and again, when I say political quagmire, this is what I mean. Scott Bessent, who's the U.S. Secretary of Treasury, says the U.S. won't hit China with tariffs over Russian oil unless Europe goes first. All right, when this news broke, I think this was kind of the nail in the coffin. All right, U.S. Treasury Secretary Scott Bessent said on Monday the Trump administration would not impose additional tariffs on Chinese goods to halt China's purchases of Russian oil unless European countries hit China and India with steep duties of their own. Bessent told Reuters and Bloomberg in a joint interview that European countries needed to play a stronger role in cutting off Russian oil revenues and bringing its war in Ukraine to an end. Again, Nvidia is caught in this because now you have basically the United States pressuring a big customer of China, right? A big partner or trade partner of China to impose tariffs. And this is putting more pressure on China. So I'm not surprised China finally just said, you know what, we don't even need those Nvidia chips. All right, we expect the Europeans to do their share now, said Scott Bessent, and we are not moving forward without the Europeans. Bessent also said he pointed out in talks with Chinese officials in Madrid on trade and TikTok that the United States had imposed tariffs on Indian goods and that Trump has been urging European countries to impose tariffs of 50% to 100% on China and India to cut off Russian oil revenue. So again, more political quagmire stuff, more geopolitics playing into this. This is what I believe is going to really affect Nvidia. All right, this is what is causing this right now. However, all right, we had some really good news for Nvidia. All right, everybody remembers when Nvidia went on this huge world tour, visiting all these countries in the Middle East, and basically garnering up a bunch of support to sell their chips. Well, they were able to accomplish this in the United Kingdom, which I believe is a tailwind for Nvidia. Microsoft, Nvidia, other tech giants plan over $40 billion of new AI investments in the United Kingdom. All right. Microsoft said on Tuesday that it plans to invest $30 billion in the UK by 2028 as the company builds out its artificial intelligence infrastructure. Nvidia, Google, OpenAI, and Salesforce announced plans for multi-billion-dollar AI investments in the country. We also have from Nvidia announcing an 11 billion pound, $15 billion of investment in the United Kingdom with partners Nscale and U.S. infrastructure provider CoreWeave. All right, you guys have heard me talk about CoreWeave on this channel before. That Nvidia has a huge stake in CoreWeave. As part of the investment pact, Nvidia plans to deploy 120,000 Blackwell GPU chips in the United Kingdom, its largest ever deployment in Europe. So again, it's looking for additional revenue streams, it being Nvidia. So I think this is a good tailwind for Nvidia. This will truly make the UK an AI maker, not an AI taker. David Hogan said, Nvidia's head of enterprise sales for the Europe region, in a call with reporters ahead of the announcement. Google announced a £5 billion or $6.8 billion investment in the UK for their AI development. Google said the new facility will help meet the growing demand for the company's AI-powered services, such as Google Cloud, Workspace, Search, and Maps. It added that the investment is projected to create 8,000 jobs. This one was a good one right here. OpenAI is also making a major commitment to Britain in the form of Stargate UK, a dedicated UK version of its massive Stargate AI joint venture with SoftBank and Oracle in the United States. So I'm still very bullish on Nvidia. Again, they're not going to wait and rely on China revenues for anything, while this beef between the United States and China comes to hopefully a resolution in the next either a couple of weeks or couple of months, or hopefully a couple of days. Nvidia is not waiting. They're looking to make, they're looking to expand, their partnerships. They're looking to expand outside of the United States, outside of China, and selling, their chips to basically everyone. You have these sovereign aiding up everywhere. You have the Middle East, again, Saudi Arabia. You had it in Qatar, Dubai, or the United Arab Emirates, and now you have it in Europe, and again, now in the United Kingdom. So this is all a tailwind for Nvidia. While that news from China was a big hit, I don't think it's really going to stop Nvidia's continued dominance of the AI semiconductor space. All right, so moving on, just a quick shout out, quick plug. All right, if you guys want to join the community, I'll post this link down below in the comment section. You can sign up and I'll send you the link to the Discord. All right, so Robinhood was also in the news. You guys know that I have a decent position in Robinhood, but they plan to launch a startup fund open to all retail investors. This is really, really cool. Robinhood announced Monday it has filed an application with the U.S. Securities and Exchange Commission to launch a newly publicly traded fund that will hold shares of startups. The idea behind the Robinhood Ventures Fund 1 is to allow every retail investor access to make money on the hottest startups before they go public. All right, this is typically only allowed for accredited investors or, investors, with a ton of cash or special connections. But Robinhood is truly trying to democratize this. And the way Robinhood is going to make money on this, which would be really accretive for, investors in their, regular Hood stock, is through the management fees of this fund. Robinhood's big pitch is that retail investors are being left out of the gains that have amassed by startup investors like VCs, venture capitalists. That's true to an extent. Accredited investors, or those with a net worth large enough to handle riskier investments, already have a variety of ways of buying equity in startups. Robinhood's last such effort was controversial, though. The trading company, Robinhood, launched what it called private tokenized stocks in the EU earlier this year, and that was met with, a lot of positivity. But then you had OpenAI come out and say, no, if you buy those tokens, you do not have direct shares in the OpenAI, stock or anything like that in their private stock. So that kind of ticked off a lot of regulators in Europe, and definitely ticked off a lot of retail investors. But, they're still moving forward with, tokenizing stocks or tokenizing assets. All right, this new closed-end Ventures Fund 1 is a more classic mutual fund style approach. As to when Robinhood's new fund will be available, we don't know that yet either. Robinhood, which is in a quiet period, declined to comment. So this is, again, bullish for Robinhood. I think they have a lot of cool things coming out. Again, they just completed their Robinhood event, and or Robinhood Summit, and it was a lot of cool features coming out. They're integrating artificial intelligence, and again, they have a lot of future things coming out as well, such as banking for just regular people, and you'll be able to go to Robinhood and get a mortgage in the future, which is crazy. This is becoming an all-in-one fintech. So I'm still very bullish on Robinhood. Where I can see it in a couple of years, maybe it'll hit that, 100 or that $1 trillion market cap. Not entirely sure, but I am definitely bullish on Robinhood. All right. So from that news, you guys can see Robinhood's kind of just been kind of flat this whole week. Nothing really all that exciting. It did have a huge pump during that Robinhood Summit, all these new features coming out, everything, etc. And they got into the S&P 500, so Robinhood had a really good pump these last couple of weeks. So still bullish on Robinhood and the future for it. So I opened a new position in Invesco's S&P 500 Momentum ETF. The Invesco S&P 500 Momentum ETF fund is based on the S&P 500 Momentum Index. The fund generally will invest at least 90% of its total assets in the securities that comprise the index. The index tracks the performance of stocks in the S&P 500 index that have a high momentum score. The fund and index are reconstituted and rebalanced twice a year on the third Fridays of March and September. Constituents are weighted by their market cap. So the reason why I decided to go with this, and you guys can see here, I have just a moderately small position. This is, $5,000 in here. From my total portfolio, it's only making up about 0.75% of the total portfolio. But I did open the position. All right. I plan to get this to $10,000 probably in the next couple of days or so. And the reason why I chose this one was because I just wanted something with a little more risk on that I could add to complement, the other index that I do hold, which is VGT, the Vanguard Information Tech Index. All right. So moving on, BitMine was in the news. I own BMNR. Okay. BMNR is an Ethereum treasury that's spearheaded by, or the chairman for BMNR is Tom Lee. So I really am bullish on Ethereum. All right. I haven't talked about it enough. You guys heard me talk a lot about, MSTR and Bitcoin, but actually having heard Tom Lee and other people speak about Ethereum and how it could revolutionize, the financial sector, I am completely sold on Ethereum and what it could potentially do in the future, right? So I opened up a position with BMNR some time ago. I went in with $20,000. I have 400 shares. And, it's been whipsawing up and down like crazy. As you guys can see, we can see here for the 1 week. Just a week ago, it was down quite a bit. And then if we zoom out even more than that, a month ago, September 5th, it was down 22%, right? And then it just climbed up like crazy. So I'm very bullish on Ethereum, but let's take a look at what's going on with BMNR. So Bitmine Immersion announces crypto and cash holdings of $10.8 billion and Ethereum holdings exceeding 2.151 million coins. All right, they are fast becoming the biggest Ethereum treasury, right? Like how MicroStrategy is the biggest Bitcoin treasury. They hold more Bitcoin than, countries. This is what BMNR will eventually be, in my opinion. All right. Bitmine crypto and cash holdings and the moonshots, which they invested into Dan Ives, company, Octo or Orb or whatever they're calling it. It's called 8Co. That became a crypto treasury for WorldCoin and is backed by Sam Altman. So, they're still holding that money with them. They invested, I think, 20 million and now it's worth, a couple $100 million. But BMNR, I am very bullish on. All right. Long term, plan to hold this for easily the next 5 years. I am not worried about it. It is going to whipsaw like crazy as Ethereum does. So you have to keep that in mind, especially if you're going to be investing in any treasuries. Just expect pain to come, right? Expect some pain to come. There will be a consolidation event, but I think BMNR, and by that extension, I think MSTR will be perfectly fine. All right. So moving on, this one I think was, I don't know, a lot of people were not happy with this. Okay, let's talk about it. WPAY, Weekly Pay Universe ETF from Roundhill. They came out with their first distribution of 53%, right? Or 54 cents. I don't know. I was pretty happy with that. That wasn't that bad. I don't have really a position in this. I only have like a single share, and I just did that out of spite. But I don't know why people are upset about this. This is a Weekly Pay Universe ETF that holds all of the weekly pays. And not all the weekly pays pay out insane distributions like, 80, 90, 100%. Some of them only pay up to about 30%, right? And consistently have paid up to 30%. So I'm not surprised by the distribution rate of 53%, or at least I was actually thinking it was going to be between, 50 and 60. So I'm not, again, surprised by this. But, if you want uncapped growth, with a distribution income, I think this is a fantastic fund. A lot of people, again, were left wanting a little bit more, but I think as time goes on, as we move past this, kind of volatile time where you have, stocks that are kind of whipsawing up and down, they're not really growing in value. As we move past this and get back on the tracks, get past September, get back on the tracks, and get back into this bull market, I think WPAY, in my personal opinion, is going to be a winner. And I definitely do plan to open up a bigger position in WPAY in the future, unless something dramatically changes my mind. All right. So with that being said, guys, I know this is a long video, a lot of news we covered. All right. I'm still very bullish on Nvidia. I'm not going to be selling out, even though this news was kind of bad. And, shared with you guys my new position in SPMO and BMNR. All right, so with that being said, I hope you guys enjoyed the video. I will see you guys in the next one. Take care.